The South African drug company Aspen has reduced its takeover bid for Australia's leading maker of generic medicine, Sigma Pharmaceuticals. Aspen's offer for the troubled company is now 55 cents a share, about 7% less than its indicative bid. Sigma has told shareholders to take no action while it decides whether to endorse the offer. Emma O'Sullivan reports.
Sigma has been on the stock market sick list for several months. Potential suitor Aspen has been going over the company's books since launching a conditional takeover offer in May, and it appears to have found that Sigma's financial situation is even worse than first thought.
But obviously there's been a lot of uncertainty around Sigma's operations for some time, and now that Aspen's had the ability to do a bit of due diligence, reducing the offer, in my view anyway, can't be a total surprise.
The South African drug company's initial conditional offer valued Sigma at 60 cents a share. It's now reduced its bid to 55 cents. In a statement, Sigma told shareholders it was considering the proposal and recommends that shareholders take no action at this stage. Sigma expects to make a further announcement in relation to the proposal in due course. Trading on Sigma shares was halted before the announcement, and the market responded well when trading resumed, with the stock closing almost 14% higher at 45 cents.
The fact that it's still substantially below the takeover offer, which is 55 cents a share, suggests that the market does doubt whether the bid will go ahead.
I suppose that's partly symptomatic of the fact that the offer is highly conditional, so there are still a number of things that need to happen for the formal offer to occur and people to be able to accept it. So I guess the share market's really telling you at the moment that they're not very sure that the 55 cents will actually be delivered.
Sigma has been hurt on a number of fronts lately. There's been intense competition in the generic medicine business over a number of years. In March, the company wrote off more than $400 million in goodwill relating to its merger with Arrow Pharmaceuticals more than 5 years ago. And now the government is aiming to cut spending on drugs by $1 billion a year through changes to the pharmaceutical benefits scheme. Analysts believe there are many more challenges ahead for Sigma's management team, which includes new CEO Mark Hooper, who takes on the role in September.
Mark Hooper's a very professional manager, I would be surprised if Mark is coming into the business just to see it sold off.
While Sigma digests the revised offer, there are doubts about whether a deal will eventuate.
But my guess is they're going to reject the bid because the price is too low. Personally, I think they should encourage the bid and try and get a higher price out of Aspen, and failing that, open their books and see if they can encourage a bid from someone else, because I think the alternative is a plunging share price.
I don't think this deal is a certainty. There's a lot of caveats put upon the offer that was made today, involving the future trading of the business and market conditions and those sorts of things. So I think that there's a healthy level of scepticism in the market if this deal will proceed.
The Sigma board will announce its response to the bid by the end of the week.